Hi everybody, it's Thursday, February 26, 2026. Our headline today, 10-year note yield still falling. With above target break-even inflation rate, the Fed wants it at 2, but the market says no, the next 10 years will average 2.28. Alongside crude oil going up recently and remaining relatively high, in normal circumstances, that would put pressure on the 10-year Treasury note yield to rise. But it has been tumbling since the beginning of February, and as I record, is back down to 4.00%. Additionally, tech, the NASDAQ, the triple Qs have not been going higher and higher and higher and higher. Instead, today we're at the same price we were back in October of 2025. And since that point, we've been having just a huge distribution, rounded top here, along with some gigantic engulfing red candles on high volume. This all screams distribution in the stock market. Normally, lower yields help tech. It's cheaper to borrow money. So what's the problem here? What's going on? All the markets are screaming the same thing. The controlling factor now is expectations of lower growth. Remember, the 10-year Treasury note yield really reacts to two things: inflation expectations and growth expectations. If either or both inflation expectations are high, then the 10-year yield goes up, and when one of them goes down or both of them fall, then the 10-year Treasury note yield falls. And I want to note, inflation expectations are still high, but growth is perceived by the 10-year Treasury note yield as being so bad that it has been just falling and falling. And it looks to me like we are headed below 4% again. As I record, we are at 4%, 4.00%. We're also below this little line I have here, this yellow trend line that dates back to this pivot low in April of 2023. It connects to these most recent 3 points exactly, October 22nd and December 1st. It's been acting as a support zone, and we cracked through it to the downside today. And a reminder, or if you're new to the show, the U.S. 10-year Treasury note yield has formed a very formidable head and shoulders top that I've been discussing for a long time now, dating back to 2022. You have the left shoulder here, you have the head there, you have the right shoulder here. If we break this, the target, if it were to play out the way head and shoulders typically do, the target is 2.3%. If you live by the charts, die by the charts, I mean, that should be your target. But even I'm not convinced that we'll necessarily be able to get down there, just because of the elephant in the room is the fiscal deficit problem. There's no stopping or slowing the spending or plans to balance the budget by having the correct equal sized tax revenue coming in. But who knows? Maybe it will get down to 2.3%. You'd really need a crystal ball for that one. Second agenda item is the same as our community topics. What moves did you make, if any, today? I sold my NVD. It's an Nvidia short ETF. If you follow my show and you watched Monday's show, you see my move was buying NVD, a double inverse of Nvidia. I didn't talk about it on Tuesday, but I doubled it. Tuesday's show title was Final Pump from President Trump Before Thursday's Dump. I was thinking specifically Nvidia because they had the earnings right after the bell on Wednesday that would pull the whole market down. While it did have some effect, it wasn't really a crash. We went down the S&P 500 0.5%. The Qs fell back 1.2%. The RSP equal weight index actually, believe it or not, found an all-time high today. Is that an all-time high? It is an all-time high in the RSP today. So enough rotation to put the equal weight higher. Anyway, I sort of was correct about one thing. Nvidia being the main dumper, which it did dump today, like 5.5%. I'm out of my short, even though I think this may play out to be much worse. You know, if you're going to play a head and shoulders top, you typically want to short once you break the neckline, maybe even retest it. That's normally the place you actually short. We are in a head and shoulders top, but without it playing out yet, you know, the odds don't suggest that this is necessarily happening yet, but it sure is set up to do so. So on the day, not just Nvidia, all semiconductors got hit pretty good, while a lot of other industries actually did fairly well, but mostly mixed. Sorry for the late release of the show and the chaotic order of things tonight. But anyway, I had a long day today. But anyway, TLT, my favorite place to be. Is this breaking out to the upside? Did we consolidate? And is this a breakout? It looks like a breakout to me. We're closed above all the wicks of this sideways chop here. I want to note that in addition to the long yields, the 2-year Treasury note yield is starting to suggest, hey, maybe we're going to see more cuts coming sooner. This is not a very strong looking chart at all. Today falling 4 basis points, but at the bottom of where we've been, almost like we're sort of like trying to see if we can go lower. Coming up tomorrow, we get PPI data, and next week we get ADP on Wednesday and government employment data on Friday. And of course, the Trump saga continues. Also, we're waiting on updates from talks with I was running the Middle Eastern country with the whole oil thing. If I expect this to resolve, and as long as it does, it removes some risk premium on oil. And I think crude oil will drop, and I think it'll help pull the 10-year Treasury note yield even further down. It's already abnormally low considering special inflation expectations in crude oil, like I mentioned earlier in the show. Anyway, that's all I have for you for today. I really appreciate all your watching, liking, subscribing, sharing, commenting, and all of your support. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.